Hello, it's Greg Harrelson here with Century 21, the Harrelson Group down in Myrtle Beach, South Carolina. And I just wanted to, first of all, wish you a happy holidays. But more important, I wanted to kind of wrap up the year with giving you another real estate update, share with you what's going on in the Myrtle Beach real estate market. And overall, I can say with confidence that it was a great year. I mean, sales were up slightly from an annual basis, 2018 over 2017. Days on the market decreased a little bit. Prices increased just a little bit in most categories. So for the most part, I can say 2018 was a great success. Now, it probably didn't increase as much as most people wanted it to, but we did see some positive numbers. What's really important right now, though, is the last 90 days. So I don't always look at I look at every month, but I'm always careful at reporting things on a monthly basis because things can shift in one month and then the next month it reverses. So what I do is I either look at things in an annualized basis, or I look at things semi-annually, or I look at things quarterly. And one of the things that I've done recently is I decided to go back the last 90 days. So I took the last 90 days of 2018 and I compared it to the last 90 days of 2017. Now, the reason I do this is because some people will say, well, in the last 90 days, the summer was kind of ending, so the market may have slowed down. So we can't compare the last 90 days to, say, 90 days previous to that, because then the seasons would be different. That might not be an accurate comparison. But when we compare the same time frame for each year, excuse me, I think that's a better indication of where the market's headed, what are the trends. And, on a monthly basis, when I look at shifts, I say, okay, well, those are small little changes, but I wouldn't call that a trend. When things are happening or reversing or shifting for 3 months in a row, that's when I look at it and say, this might be a continuing trend. This might be an indication of where we're going. Now, keep in mind, there have been multiple interest rate hikes. So that does affect the real estate market. And you've seen Wall Street has been very volatile. It's been up, it's been down. Most recently, it's been down significantly. And I don't know all the aspects of what's going to control the stock market, but we do know that interest rates do play a factor. When interest rates go up, things start to kind of go down, and that is the case for real estate because borrowing money costs more money. And as people have to spend more money to borrow the money, then they have less buying power, purchasing power. So the market tends to kind of go down, demand, lessens. So when we look at the last 90 days, which is when we would probably have started to see the impacts of some shifts in the economy, the last 90 days is showing some signs of softening. And I've given you some facts in an email previously. Hopefully you saw that. But some of the things that I'll reiterate is, closed transactions in the last 90 days were down 9%. Now, overall for the year, it's fairly flat, maybe up a little bit. But the last 90 days, we've had a 9% decrease in sales. In the condo sector alone, they've decreased, that sector of our business has decreased by 12%. Now, keep in mind, this is not seasonality. This is not because the seasons are changing. This is compared to the same time frame last year. So a 12% decrease in the last 90 days over last year is a bit concerning. It's something to take note of. Some other things that I've noted is the new construction. Now, new construction it's important to understand that a lot of the buyers were moving to new construction. And that was one reason why the resales were not selling quite as fast as everyone hoped to, is because the developers came in and they built so much new product. But in the last 90 days, new construction has actually dipped around 4.5%, close to 5%. At the same 90-day period, that resales have dipped 9%. But notice how the new construction has actually dipped less or at a smaller rate than the resales, and that's because builders, one reason is because builders are building in incentives and price breaks to get the buyers that are in the market to buy their product versus buying resales. So new construction is really our competition, but it's interesting that both of them actually saw a decrease in closed sales in the past 12 months. The new construction, another note on new construction though, is that in the last 30 days, just the last month alone, new construction is down 13%. So what I'm looking for is I'm looking for at the beginning of the year, these builders will likely start really advertising lower prices, discounts, higher incentives, bigger bonuses for real estate agents to sell their product. In other words, they're going to do everything they can to sway buyers over to their product so they can liquidate their inventory. Now, I'm not declaring that there's a crash in the real estate market. I'm not saying that. I am saying that there is no question that the market has shifted. It is showing signs of softening. Will that reverse next year? I don't know, but we do know they're anticipating additional interest rate hikes. So I would, if I was a betting person, a betting man, I would say it's probably going to continue to soften. Now, again, I don't want to scare anybody. This is not a doom and gloom conversation. I don't think we're going to see a crash. But if I am considering selling a property within the next 12 months, I believe doing it sooner than later is a good idea. So all I'm recommending, if you're thinking about selling, give us a call. Share with us what you have, what you're thinking about doing, the condition of your property, and we can share with you what your price would be, what you could get in today's market in a reasonable amount of time. And then at that point, you can decide whether or not selling is right for you. But I think it's important that early on in the year, you assess the situation, get an understanding of what your market value is, what the price would be for your property, and then make your decisions. Build your strategy, your real estate strategy for 2019. Build it early in the year by contacting us. So I'm Greg Harrelson with Century 21, the Harrelson Group. I would love to help you. I'm very, in touch and focused on today's market. So any question that you ask me, I'm sure I'll have the answer. If I don't have the answer, I'll do the research and find the answer to make sure you're an informed consumer. Again, Greg Harrelson, Century 21, the Harrelson Group. Have a wonderful day.